Tina a round of applause,
No,
everybody.
round of applause. Thanks, you guys. Most importantly, thank you all for coming, because I thought, oh, nobody's going to come. They told us also we had to stand here. We're under strict instructions. So, and as Cheryl said, I'm hoping that this will be really interactive, because I think we have a lot to share with one another as well. So I know a lot of the sessions that we've had up to this point have been very transactionally focused, which is important. But this is going to be a little bit more about, more on the advisory side, strategic, and addressing the needs of building your own practice, but also helping your clients. So above and beyond the standard bookkeeping type stuff. So does that make good sense to everybody? Is that what you're expecting? Okay, good. So let's just dive right in. Dive right in.
Go ahead.
I'm gonna, next slide. You good with that? Oops, sorry, okay.
I'll get there.
We work really well together. So first thing, even if you're not, let me just start by saying this. Even if you're not planning to right now, build a niche practice, you prefer to be, more of a generalist or whatever. These are, even for those that aren't doing that, this is a good discussion about what you would consider if you were looking at a change, or if you're not looking at a change. Where you can actually kind of like expand or consider expansion. So, we heard a lot about yesterday from David's keynote speech, and he's right. For all of us that are in the accounting, finance, advisory, operations field, there's so many changes, there's so many platforms, there's so many solutions, and so many regulatory and other challenges. It's extremely difficult for any one of us, or even the team of all of us, to keep up with the changes and the new systems, integrations, whatever. So in many cases, as the expanse of our business and our clients' businesses grow, it becomes more and more difficult to be good at doing absolutely everything. So sometimes it does make sense to take a look at what you enjoy, because I'm really big about passion, right? Just because there's a need, if you don't have a passion for it, maybe that's not the best idea, right? So let's just talk about how you would go about analyzing what niches you'd be in. Well, before I do that, how many in this room have already niched their business or decided on a certain set of verticals or concentrations by customer size or anything? Show of hands? Okay, yeah, kind of, and me too. So, just for the consideration, I'm glad that that everybody's still discussing. So, I do lead a vertical in the firm that I work for, but I also lead the team of what we call diversely qualified CFOs. And these are the folks that are more generalists, so that when a client comes to us, they're not fitting in one specific niche. We don't turn the business away, right? Will that change in the future? I don't know. It depends a lot on how we find our team and how we construct our team. But for all of us, one way to determine what niche you might want to be in or you should be in is to do a couple of things. And these are really easy things. Not complicated, not a lot of money, a little bit of focus and a little bit of time, and a little bit of collaboration with your team. So the first thing to do is, really just take a look at your client portfolio. And you can take a look at it, you can slice and dice it many ways. Just visually. And you know the numbers, we don't have to go through statistics and numbers, but how many do the 80-20 Pareto principle, right? How many of your clients comprise 80% of your profits or your business, and then the other 20%, how profitable are they? It could be the opposite too. Maybe the 20% of your customers are really profitable, so that's a decision as well that you'll have to make. You can also look by business type. So what I mean by that is there are certain areas or regions across the globe that might have concentrations of businesses or a manufacturing type. So sometimes it makes sense if you're in those regions to focus on what you're doing in that area. And I'll bring up one example. So we had some. When I was working in the state of Indiana, they do a lot of manufactured housing there, and really nice high-end homes and things like that. So there's a lot of accounting practices that are specializing in manufacturing, logistics, and then of course, assembly. So that may be one example, right, where there are regions or pockets where there's a certain interest. Napa Valley in California is another one. Los Angeles maybe for film and production. So you may want to look at, where you are to determine where you want to build your niche. Sometimes, like I said, profitability can matter too. Profitability isn't, everything in the be-all and end-all, but it's important, right? So if you're spending, 80% of your resources and your people time on the lowest profit portions of your business, then it's probably time, to make a decision: is that's what I want to do, or do I want to, shift what I'm doing? And then, of course, also by size. So There are some firms that prefer to work with smaller clients, some firms that prefer to work with larger ones. So take a look at your own client portfolio and determine, where your interest lies and where your opportunities lie. I know that sounds like really simple to say, but the way to do it is really to look at your portfolio. Then the second step, this is a little bit harder, is to look at your team's capabilities, right? Because unfortunately, when you're looking to niche your business, not all team members are going to be able to make that switch, either by qualification or by size or by their own interest levels. So it will be important to have the right team in place because you have to keep them motivated. And if you're managing a remote team, it's even more difficult, right? A very easy way to do this is to quite literally do a client review, which you how many folks do that every year anyway? We just look at your whole client portfolio. Yeah, so that may be a good time to take a look at what areas do I want to focus on, and then consider market gaps. For me, that was when we were looking at, taking a look at niche in our firm, that was very important for us because there were gaps where, a lot of firms would be doing professional services, right? So there was a lot of overlap there, but not a lot of firms were doing late stage SaaS, or not a lot of firms were doing life sciences, human life sciences. But when we looked at that, guess what? Just admitting that here. So we looked at, we're going to go into these 6, 7, 8 verticals. We missed verticals that were up and coming, so we have to keep our eyes open on that. And so, for example, we were looking at life sciences, but we forgot to look at things like agricultural technology, which is really huge, right? I mean, there's a lot of promise there. So you have to be careful because we niched into like life sciences and we all thought, perfect, now we got all these great verticals. I'm like, getting a lot of clients that are in ag tech and that doesn't fit in life sciences because life sciences is more like human life sciences for our firm. And then, of course, assess your business plan. Now, if you own your practice or you're one of the C-level execs in the practice, you do also want to look at like what your exit is. And you may not have an exit, in mind in the near term, but it's important to consider where you want your business to be, right? So I always say start with the end when I'm talking to the clients. I'm like, when I'm talking to my own clients as a CFO, I'm like, where is your exit? Let's start there. And they're like shocked by that. What do you mean exit? I'm just building this business now. I'm like, I get it. What do you want to be, 5 years from now? Do you want to sell the business? Do you want to scale the business? So do you want to be acquired? So it's really important to ask your own self that as well, right? So if you're looking at and if you work for a large company, which I do, if you work for a large company, it's not my business what they're going to be doing, but it still makes sense for when we're talking in the team that's building the niche practice to ask ourselves that question. Do we want to continue to grow the firm by acquisition or organic growth? Do we want to stay nimble, meaning we just want to have this really core team? Do we want to pass the business along? So do we want to be acquired? Are we for sale? So those are all good considerations for when you're determining what you want to do as far as establishing a niche, and even if you want to do a niche. I'll stop for a second. Any questions so far? Is this helpful so far? Yes. Okay, thank you. Okay, so, and there's no such thing as interrupting, so because we're all friends here. So let's go to the next slide. Perfect. So once you've determined, and again, even if you're not deciding to niche your business, I'm hoping that these hints or comments will still be helpful in the business that you're generally running. So the first thing we do after we looked at, what niches do we want to be in? And we ended up setting, I think it was 7 niches that we were going to specialize in. And then, as I say, then they dumped all the other stuff on me. Just kidding. But one example is then once you've determined, hey, I want to do ag tech, or I want to be in AI, or I'm going to focus on early stage SaaS, right? Or VC-backed firms, whatever, or PE-backed firms. Once you've done that, then actually sit down. This is a really important part of building out and being able to scale your niche. Take the time with your team. It can be an offsite. It can be like a meeting every week for 3 weeks, whatever. Actually identify the deliverables for that niche, right? Or for the niches that you're going to be in. These are just examples. I'm not saying like go through every single one of these, but it is going to be important to actually say, okay, I'm in this niche, so I'm going to pick one, right? An AI, right? You decide, I want to be an AI, because everybody wants to be an AI, right? Cheryl and I were joking about that before. We'd pick AI for sure. So all joking aside, so you say I want to really have a really strong practice in AI. What companies that are in AI, what do they need? What systems do they use? Where do they, how do they do their budgeting? What do their clients look like? What are their exit strategies? And then you identify what deliverables you'll be marketing to them or the message that you're talking about when you're selling your firm, right? So, and it's going to matter, it'll differ. These are very general items. This would apply to any business, right? But what you'll do as you're going through each of these is you'll say, okay, let's just pick one of them. We negotiate with key vendors, renew contracts, supply chain and logistics. Supply chain and logistics, oh, that doesn't apply to AI, but it does, because there's some AI firms that are working with sensors and cameras and things like that. So logistics may be part of that, and you'll want to make sure that when you're messaging to this niche, you're including that, right? So because you want folks to immediately be able to see on your profile, your website, your social media, that firm can service me without having to dig a lot or ask a lot of questions, do a lot of research. So, oh, I forgot to mention the QR code.
Oh, that's fine.
Okay, there was a QR code, so you can also, drop comments in, negative comments, if you need to. Positive comments, $5 goes your way later. Just kidding, on an ExpensiCon card, of course.
Yeah, at the end, I'd just share the QR code, and just so you know, the presentation and any documentation, that, like the templates, we're going to drop in there. If you have any questions for Tina, you can ask her. You can call up, but it's pretty cool to just message her on new ExpensiCon. Okay, continue.
And that way I'll feel cool when I get those things. Look, I got all these things. No, I'm just kidding. So identifying your deliverables is important, because what does it do? It structures your messaging for the marketing of what you're going to be doing or what you're offering to clients. It also helps you focus your team on what they need to be able to deliver to the clients, right? So, and this is going to sound horrible, but once you determine what your deliverables are, communicate those to your team and to your clients. A lot of times you'll see a fallout of some team members too, because they're like, I don't really want to do compliance, tax, and regulatory. That's not my thing. So, there's some natural attrition there, which is hard, but it's a good, being able to communicate that at least gives the human capital in your own firms the ability to manage themselves and make their own decisions. Make sense? Is this helpful? Okay. You'll have the slides, so don't write notes, and these are just examples. Okay, sorry. Okay. And then, so I left off on the last discussion. The messaging is really important when you're building and when you're scaling up your niche practice, right? Because you want folks to be able to, in PR, they tell us, have 3 things that you're going to say. Not more than 3, because that's all anyone's ever going to remember. I'm like, really? Is that true? And then I'm like, yeah, I can only ever remember about 3 things at a time, right? So your message should be constructed to communicate 3 key things about your firm. I'm a niche business, I specialize in this, and this is what you're going to get from me, or whatever your messaging is. It's really important to make sure that messaging is consistent from you as the firm leader, or the key members of the team that leads your firm, teams that lead your firm, because you have to communicate it to your own employees so they can project that to clients as well, right? Otherwise, everything's disjointed, right? Okay, so this is, I have to say this. So accountants are really bad about giving away, it's even worse than that, about pejorating their value, right? Saying, oh, well, I could do that for $200. No, that's a $5,000 deliverable, right? So it's time to actually, in your messaging, and I asked you on the prior slide, look at what those deliverables are, and you can see the value, even if you pick 3 of those. That's hard work on those 3. Look at the value that you're providing, not the hours, but the value that you're providing. Don't give things away for free. So what you want to communicate to your team with that concept in mind is the same thing, right? Every contact with your client, we try to say for our little group, we try to say every contact with a client, or prospective client, I should say, when we're marketing, has to provide value. So at the end of the call, the team call, if it's a prospect call, or if it's a call with the client to go over their budget or go over their financial plan, we sit down and we ask ourselves, what value did we provide? Not, oh, I did the reconciliation within 5 days. That's lovely. But you know what? Is that really what your client is hiring you for? No. That's the bookkeeping, the reconciliation, all the monthly close even. That's part of a standard, that's kind of like table stakes for accounting, right? Where the value comes in is what did you help them make a decision? Help them walk down the road on the next step to making a decision, right? Did you review a contract and point out some things to them like, you know, you've got it structured so that your client's going to pay you after 30 days. Take a deposit up front. That way you get some cash flow, right? Don't be shy to ask that, Mr. Client. And you shouldn't be shy to ask that for, of your clients as well. But that's what we ask ourselves. Every message, every contact with the client, phone call, email, has to provide some value. And then the other thing is, what we find a lot is we have, inside of our niche practices, sometimes we have clients that are like, here, okay, in the deliverables it said you were going to do these 6 things, right? So I want the bookkeepers to do this to keep my costs low. The thing to do with niche, when you're building and scaling a niche business, is determine your value, charge your value, and how you deliver that product, that value, the financial reporting, whatever, is your determination to make. They don't need to know how you staff it, right? I'm outsourcing it. Who cares? I just want the deliverable done so I can have functional financial statements and make intelligent decisions, right? So it's you're building the team, you manage the team. All they should see is the value you're delivering inside of that niche. Again, not selling hours or bodies, that goes along with the same thing. And then at the end of the day, I mean, ask yourself when you're after the meetings with your clients or after the phone calls or the prospect calls, ask yourself, what did the client really want from me? Do they want answers? Yes, of course they want answers. But in fact, what they want is the ability to run their business, right? That's why they hired us. And that's the only reason they hired us, right? They have to they have compliance, they have audit, they have all those things. But at the end of the day, it all comes down to, I have to have comfort that you know my business, that you understand what I need, and that you and your team can deliver it. And that's really important when you're scaling that niche practice. Any questions so far? Any input? Anybody want to share anything? No? Okay, perfect. So this is really hard because we said accountants are really bad about charging the right amount for the value they provide, okay? I hear it all the time. I mean, literally, and I do it too, but I'm just saying, I hear folks like even yesterday, they're like, well, the client said, could I bring it down a couple $1,000s? I'm like, we all hear that all the time, right? If you're building a niche business, right, and you're differentiating yourself on your specialty in that niche, charge for it, right? And your clients they will likely pay for it. Why? Because that's what they want. They want the delivery of that confidence, the comfort, the ability to make good decisions. So you need to charge for it. There's a couple of ideas. I do have a proposal template I'll share like Cheryl said, but let me just go through this a little bit to start. So first thing, when you're pricing your niche practice, you have to and that's why that deliverables is really important, right? You can tier your offering inside of the niche, right? So you can say, look, I'm going to be, let's pick that AI client that has the cameras and the sensors that helps AI see human emotional interaction, okay? So that client's like, yeah, I'm just a startup right now. I might need only like, a financial close and maybe have somebody help me look at some contracts, right? So you can do that on an hourly basis, or you can say fixed costs, right? So you can predict your revenue. That's the other thing. You're going to have to be building a team. You need to get the revenue in to get the team built, right? So remember that. It's going to be hard for you to get the right team members. Some of them might have very specialized skills. They might be more expensive. So you do want to get your money in timely. So you may want to tier your offering, right, inside of the niche. So you're like, okay, I'm an AI. So my brand new startup AI companies, this is their package. They get no CFO time. They get a monthly close, and they get a budget review with my team, controller team. The second tier up, they're going to have access for a couple hours a month to a CFO. Somebody like you guys in this room, right? That understands operational finance, operational business, and can deliver on, to some extent on regulatory and compliance with with other team members, their auditors and their lawyers. And then, of course, you have your third package, right, that has kind of like all-encompassing. You can call the CFO whenever you want. You can call your controller within business hours, whatever. But structure your packages inside of your niche or vertical to match that niche or vertical. Like, for example, if you want to specialize in e-commerce and retail, and that's tough, right? For a fact you're going to be dealing with tangible goods, sales tax. You're going to probably be dealing with logistics. that's a lot of responsibility, guidance, transactional work. So the pricing on that and the structure of the team on that could be very, very different from a professional services business, right? So, and what's important here too is you're inside of your niche, you're going to want, because there's 100,000 solutions, apps, platforms for everything. Millions of payment apps, right? Millions of HR apps. It's just ridiculous. So, so what you're going to want to do inside of your niche is decide what core packages do I need inside the niche, and then I'm going to make sure that the team I'm hiring and the team I'm training and supporting really know those packages in and out. So let's pick on e-commerce and retail again. If I'm in that vertical, in that niche, I know for a fact I better have team members that understand platforms like maybe Avalara, TaxJar, Stripe, whatever, right? They have to understand how to use Shopify, how to get reporting, how to make the most efficient way to drop those entries in. If I'm in retail, I may also need to have a really good either contract warehouse fulfillment software or inventory software. So pick the ones that you're going to choose, not any software, but pick them. Of course, we would for the more I don't want to say standard, but for the more the more general and all-encompassing platforms, we would pick, for example, in our retail e-commerce practice, we would pick inventory systems like SOS, Fishbowl, right? Sometimes if it's just warehouse management, we may, if it's contract manufacturing, we'll rely on reports from the contract manufacturer. But we indicate that inside of our proposal, right? And then we have clients that will agree to, we ask them or we set up the systems for them in many cases if they're startup. But the key is solidifying around platforms that you can support and that work well for like 80% of your clients, right? Expensify is a great example, right? No matter what vertical you're in, it's going to work. And you can use Expensify, as David and Cheryl and all the team said. So you've got a team that knows Expensify, it's used, almost omniscient, it's omnipresent throughout many different verticals. So you would use Expensify, right, for the expense management, possibly bill payment as well. Rebilling, if you have to do invoicing or rebilling some markups, for example, if you're in media or IR. And then you'd pick a general ledger system, you're going to pick a sales tax system. The importance here is for your own recruiting, team building, and training, because you're just waste a lot of time if you've got to learn every single package out there, right? There are hundreds of them. So that's really important, and make those somewhat standard. Not that I'm not saying you're going to standardize your business and make it boring, but you have to make it sustainable so it can scale, right? And then the other thing to consider is, these fixed price or retainer packages are really good. You get your money up front, right? Bill the first of the month for that month, so I don't have to have any deferred revenue that I have to deal with. But no, seriously, so you get the cash flow in, right? It's reliable for your own business, right? You know what's coming in, so you can use that money to build staff, build your staff, recruiting, hiring, training, retention. Those all become very important. The other thing, if you're building or you're inside of a niche that's really important, is, again, don't be shy about having, like what Uber called, it's algorithmic pricing, when they have that rush hour pricing, it's like 3 times, whatever. But we don't do that, right? We'll take a client in the middle of, I'm just going to pick on tax season, that's not the only important thing, but we'll take a client in the middle of tax season, I got this big project, I'm going to be acquired in 3 weeks, and I need to drop everything and support this. Okay. That's 3 times the price, right? Because I may have to bring staff, I may have to even pay overtime, I may have to hire contractors. Think about that, and don't be shy to ask for your value. I think it's easier when you do build around a niche or some strengths, let's just say that, inside of your own practices. It's a lot easier to justify the value and ask for it. If you're a generalist, it's kind of like, but I only charge that client $2,000. That client has 2 employees and they're in professional services. Really different from e-commerce and retail, right? From a work concentration and skill standpoint. And then, if you're niching your business and you want to consider bringing in some new clients, obviously you may have to consider some discounts at the start, but remember the cash flow aspect. And then, if there is an ongoing client that stays with you through the niche, they've been good, right? You can also encourage, the goodwill service for, getting the word out, giving me a case study, whatever you need to do to help you market and, your niche practice. Makes sense so far?
Yes.
Any questions? Anybody want to share anything? No? Okay. Oh, yeah, yay. I mean, oh, yes. Yay! Thank you.
So talking about your surge pricing, what
Yeah.
kind of a premium have you used in the past? I mean, you said
Yes.
3x, but
Yes.
do you really do 3x?
I really do 3x. So let me give you a real life example, seriously. So, I do manage the general one, but to your point, Aaron, so one of the niches that's really important to me is cryptocurrency and digital assets. Because David says it's bullshit. But, right? But we know that's not true. Blockchain really has a lot of promise. So, but there are very few firms that are willing to work in digital assets and cryptocurrency, right? But we have to pay a lot of money to bring in accounts that have that background, right? So we decided there's a huge gap. Oh, thank you for the question. Because back to that gap analysis, right? We're like, well, yeah, there's a huge gap in the market for that. And it's not all of us as really advanced accounting folks, finance folks, right? We get it. I mean, we could do it, but do we want to do it is the other question. So we're like, yeah, there's a big gap, okay? There's a lot of risk in cryptocurrency, a lot of risk. Regulatory is always changing. SEC, always changing, right? There are a lot of bad players. There's bad players everywhere, but there's a lot of bad players right now in cryptocurrency digital assets too. So we have to do a really careful job of sifting customers out. But because we know that there's not a lot of folks that are doing this right now, we won't take a client under about 3x what a normal client, one of those other verticals is. And we don't bend on it. So I got a perfect example, right? So one of our baseline packages, we call it Crypto Starter, is a $2,500 a month, and you get like 2 hours to see we call it a crypto advisor, because a lot of folks in digital assets, I don't need a CFO, I know everything. I'm like, yeah. So we call it a crypto advisor. We call it a crypto advisor. They get about 2 hours built in, but they have to have it because of the risk and compliance. We can't just have controllers and bookkeepers doing that work. It's not going to work. So, and inside of that package, we do a monthly close. We use a crypto ledger, which they pay for. I'm not paying for that. We mandate a crypto ledger. We're not going to do stuff on spreadsheets and tracking, stuff on the blockchain manually. No, those days are gone. So we had a client come to us, I think it was like 2 weeks ago. No, wait, I lied. They came to us in October. They didn't want to pay the $2,500 a month for this baseline package. I'm like, okay, well, we can't take your business. Well, I'm going to go someplace else. Okay. So then they talked to us again. Was it 2 weeks ago? I think it was 2 weeks ago. Now, all of a sudden, miraculously, they can pay that same amount. Oh, but the amount went up because now we have more clients in the practice. So we did do what we said. It was really hard because I was like, I'm going to get fired because I just turned a client down. Because Laura knows this. Company I work for never wants to turn anything down. And I'm like, no, we can't do it for that. We can't do it for that because the risk is too high, right? If we start shaving off hours, we're going to try to, we'll put a different team on there. They don't have to have any crypto knowledge. Who's that going to hurt? It's going to hurt us. We'll either, and we also do crypto taxes, right? So when I hand that off to my tax team, they're going to be like, this is trash, So no, we can't do that. So yes, we did actually do that. We held our guns. It was extremely painful. I was almost fired and would be in here asking you guys for jobs, but it paid off. No, all joke. I'm telling you the honest truth. We had 2 or 3 clients come back inside of that span, right? Because maybe they did go somewhere else. That's the other thing too. When the client does that to you, oh, we're going to go someplace else. So they go to somebody that can't do what you can do, right? They come back and their books are in shambles. So the idea is you can pay me now. Yeah, right? Their books are in shambles, and then we're stuck doing cleanup. So we tell them, that's fine. But when they came back, we told them, we're going to have to charge you for the cleanup work because we're not going to take on somebody else doing crypto. It doesn't have to just be crypto, but whatever, life science. We're not doing that. So it's kind of like pay me now or pay me later, but we're sticking to our guns. And we did do 3X. Same thing will happen during crush season. Like we have a whole separate team that does taxes, but I know most of you are really busy during tax season. So if someone does have a big project, I'm being acquired, I need some due diligence, I'm doing a fundraise, whatever, we do charge extra for that because we have to bring additional team members on to accommodate that. So that's a great question. Yes, Jane. Sorry. Oh, sorry. That's right, they're recording you, just so everybody knows. But it's all good.
Thank you. I want to go back to your question about the subscriptions.
Yes.
So how did you set up the tiers for subscriptions? Say, for example, you have CFO service.
Right.
Based on the hours or the deliverables?
That's a really good question. and a lot of people do it on hours. We do it on deliverable. So, but you can use hours, because, how do you decide the deliverable, right? Here's one example. So we have we write a treasury policy for our clients, how they should be managing that, which includes a board resolution and all this stuff. We've done it so many times, right? It differs by niche or by vertical. We've done it so many times that now it might take me, I don't know, maybe 25 minutes to do it, Jing, Do you think I charge 25 minutes? No, that's worth $2,500 to develop your treasury management policy. I know that sounds mean. It's like, but that's not what it's all the work that took us to get to the ability to deliver a treasury management policy that's reliable, that with a board resolution that a board can look at and they can approve is worth it. So we'll charge the $2,500 in that example. So, but coming to that amount, when we were, I do look at hours, I'm like, okay, well, the first time I did that, it probably did take me 6 or 7 hours to do all the research and stuff. So I'll recoup some of that investment when I continue to use this, when I offer that service and continue to use it. So we do use value-based pricing. And your point on the subscription, I think, is key. Because we don't want to also, I don't know the better word for this, so I hope it's not offensive, but we don't want to nickel and dime clients. Do you know what I mean by that? Where like you set a baseline policy and they're like, oh yeah, I'm going to get all this stuff. And then all of a sudden, like, the next thing they need is not covered in the package. I hate that.
Then we're going to get another SOW.
Yes, exactly. They're like, you told me it was $5.99 a month. I said, who told you? Number one, who told you it was $5.99 a month? No, but you're right, another SOW. But see, that's what I mean. And then the client's like, but now it's, I'm up to like $5,600 a month. Yeah, so I'd rather go out, to your point, I'd rather say it is $5,600 a month. This is what you're going to get in that list of deliverables, and you're going to pay me at the beginning of the month, $5,600. Some months I may not, I may not use all my CFO hours. So, but the next month I may use more than them. That subscription covers them instead of having this up and down bill, right? $2,300, $5,600. So we do use that subscription level pricing, and we do have me and Cheryl do have a template we will give to you. It's totally customizable in Word. You can drop your own logo in for building out the proposals for that. But we do use that. Or if it's projects, then we also do, if it's special projects like, we're in acquisition, we need to do the due diligence. So we'll price that out. But to your point on those type of things, because we don't always know what the total end result is going to cost us, we'll give a baseline with on either side, could be this, and then we'll bill the additional hours above that. But we still will tell them the project has to be paid at this amount, and then extra hours will be billed in addition. We'll let you know what that is, no extra SOW. As we're going through, we'll say, legal counsel asked us to do whatever, 5 or 6 other things, or your auditor asked us to do 5 or 6 other things. So it's going to be a couple more hours. But at least they know what that baseline is.
Yeah.
Does that help?
Yeah. I was just trying to understand, because if you have a project, subscription, like monthly subscription, it goes for more than a year. Yeah. And then that's where your scope can constantly be changing during the course, because people probably don't know what they get into.
That's true.
You feel you always want to add some more, and then there will be variables every month.
Exactly, and that's when they get mad. So you're right, I know, and that is difficult. So the other thing we do, and it's on a later slide, the other thing we do is we do a 90-day review of the engagement. You are right, it is an annual subscription, but we do a 90-day review for either up or down, and I have actually brought them down. I sound like a horrible person, but we've had, recently with some of the VC funding drying up, some companies have not been able to grow as much as they thought. So we have actually brought some of them down, right? Knowing that when it goes back up, we hope that we have the goodwill with them that would also go back up. But yeah, that's exactly what we do. We do a 90-day review, we do a 6-month review, and then we do an annual review.
That's great.
Yeah, and then if the client comes back with something like, oh, I need some due diligence. Oh, I need pre-audit scrub. We don't do audits because we're not a CPA firm, so we'll always refer to you guys. But we'll do the pre-audit scrub, right? And we'll let them know pre-audit scrub's generally going to run you, $5,000 to $10,000 for the pre-audit scrub. If we find something, if we're doing your books, we can almost, definitely tell you what it'll cost, right? But if you just come to us as a new client, I don't have enough background, so we always leave that with once we're in there. Once we're in your books, we can let you know if something needs where we find our biggest problems are like a deferred revenue, inventory, the standard stuff where things are hiding. But yeah, so we will also do that.
Thank you.
I hope that helps. Okay. Yeah, I hope that helps. Thank you. And so actually, to your point, perfect timing. So we're going to go. There are tools that I'm going to share with you, and we're going to walk through together really quickly. Are we good on time? Sorry. Yeah. Okay. So okay, we're good on time, but okay. So first thing is a proposal checklist. Now, I'm a huge hater of firms that send you a questionnaire as an intake form. I just won't deal with them. Like, I don't care, it's just not even a firm. Any service I buy, I'm like, don't send me a questionnaire. If you don't have the time to understand what I'm asking for, you're not the business for me, right? So what we try to do inside of our niche practices, I can't speak for the generalist all the time, but we always do this first. When we get a client proposal or request for a call to talk to a client, because we always do that first, we do a lot of research before because remember, we're niche, so we have a good, if we're niching things, we have a good background on what most clients are doing inside the niche, how their expenses are going to run, stuff like that. So what we'll do is we'll do a lot of research before the call. We have to know minimally what their business structure is. We try to go to like TechCrunch and all sorts of things to try to figure out what their funding might look like. We go to their website, we look at their press releases. We try to understand from their website the product or services that are offered, but we always ask about that on the call. So do your homework before. So the first thing, before you even get on the call with a client, before you even consider talking with them about your potential service offering, do all of that homework. It super pays off. Because the client's impressed that you already have all this background. Plus, it also re-emphasizes that messaging we were talking about before at the beginning, that I'm an expert in my niche, or my niche is, right? I'm an expert. We deal with tens of clients that are not exactly like you, but have these same needs. So this backs up that mentality and that messaging. On the call, we always recommend a visual conference. I know I don't like being on camera, but the visual conference is better because you can read like facial cues, like if you're losing the client, if they're getting frustrated, you can see that, right? But we don't ask the standard questions like, when were you incorporated? When did you last file your tax return? Nobody wants to answer those. So what we found is that inside of our niches, we're able to ask questions that are going to elicit a lot more information. We take copious notes. We do not record calls. We tried that once or twice in a couple of the niches, and some clients are fine with it, like life sciences, they're okay with it. Retail sometimes cares because they're proprietary products and stuff. Crypto never wants to be recorded. So we don't record the calls, but we are taking copious notes during the call, and there's more than one of us on the call. So usually it'll be the lead CFO in the niche, that can be like someone like Laura, and then if I'm one of her anchor CFOs, I'll be on the call with her, right? So we have at least 2 people on the call, and usually the controller that has experience or might be assigned to that account. We ask these questions instead. Who are your target customers right now? I'm pre-revenue. If you knew they're pre-revenue, don't ask that question, right? But I'm just saying, do your homework first, but these questions are good ones. Who are your target customers now? Oh, they're, Eli Lilly or whatever. Now describe to me what your ideal customer looks like. What is the profile of your ideal customer? What outcomes are you working towards? So, and that's the question I got to before. What's your exit strategy, right? Kind of like, I got VC funding, I want to build my product, I don't want to scale it, I want to be able to license it. So we worked with a client that was making auto sensors for self-driving cars, not for Tesla, but for self-driving cars, right? These engineers were super smart. I said, guys, there were all genders. So they were super smart, but they literally told us on the call, we're just going to build the POC, put these in certain cars, demo them. We are going to sell the sensor kits to the tier 1 auto manufacturers, but we don't plan to scale. So when we're going to be in the Internet of Things. So this is just one of our items. We're going to sell this business to somebody else. So what they did is they actually did not sell the business. They went public. It was great. But that was important on that call because we knew what their outcome was. They're never going to be manufacturing sensors at scale in Palo Alto or in Bloomington, Illinois. That's not what they were going to do. They were going to build this out as a POC. It was really clever, too. Let me just share this. So this was very clever of them. Inside their contracts, which their CFO looked at and told them, they retained the right when the sensor kits were in the cars, they retained the rights to have all of the data fed back to them. Because remember what they wanted to do. They wanted to get POCs validated by third parties, i.e. the actual auto manufacturers, Volkswagen, Fiat, whoever it was. That became really important for them during that IPO process, very important, right? Because in their filing, they made all of these comments about, we own this data. We have the right to continue to get this data on all these sensor packages. And that gave them really good feedback on what the next version of the sensors would look like. Anyway, a little bit off track, but I wanted to give us a concrete example. So what outcomes are you working towards? I don't plan to go to scale. I plan to make this brand, ubiquitous throughout Europe or throughout the US, right? Okay, well then we know what your scale is going to be and we know what we have to help you get to. What's your timeline, right? Are you going to need to raise funds in the next year? Really important, right? Because that determines how you structure your team. If they need to do a fundraise, there's a lot of FP&A work that goes, there's a lot of strategic CFO work that goes into that. And there's a lot of compliance stuff too. So, and then we ask the client, who on your team will we be working with? I mean, are we working directly with the CEO, the EA, the chief of staff, whatever? We want to understand who that person is, establish that rapport right away. So these are, the KPIs are important too. And then within 40, I'm not going to address everything, you'll have access to all this. Within 48 hours, meaning 2 business days, not actual 48 hours, we do a full recap of that call. And we send it to the customer, right, or with our proposal. So we have everything from that call. So the client understands what they told us, right? So when they get the proposal, they're not like, that looks like too much money, man. No, because we've got this whole recap of this discussion. Do you see what I'm saying? Pretty granular. And when they get that with the proposal, it's like, oh yeah, we did talk about all that. Oh, this looks good, right? So this is really important to do this checklist in advance. Any questions on this tool? Does anyone do this already? Yeah, you do it already. Okay, very good. Fantastic. And do you find this to be a good practice, if you don't mind my asking? Okay, perfect. So is this useful? She's already doing some. Is this useful? Yes. Okay, so this is just one tool. Sorry. Okay, no, the pricing template. And this, it's in the, on the little QR code, yeah. So you can drop in your own logo. You can fix this any way you want it, so it's available to you. But this is how we put the proposal together, and that's what accompanies the recap of the discussion, right? So and in this, literally, we're calling out what we're going to be providing. But you'll notice one thing, right? We don't break out by hours anything. So to your point, Jing, but when you asked me before, this is the document I was referring to. We don't break out by hours. Like, oh, this is going to be 10 CFO hours, 36, finance and accounting, bookkeeping hours. No, we tell them what the package is. So the monthly close costs this much. If you need variance analysis, it's going to be this much, and then we put in, if we have, like I told you about the one-time discount or whatever, if we want to do that, we put that in the proposal, and then of course the payment terms are in there. Now, I really am a huge advocate of build them in advance, right? Because here's why: you're going to be spending a lot of time system setup or system integration, right? And you're going to be spending a lot of time training your team, and your team's going to be spending a lot of time learning the customer. So get the money in advance, right? So anyway, but if you want to do other than that, that's cool too. So is this helpful? Okay. Yeah. And then the other thing that accompanies the recap and the pricing template is when the client signs with us, we then send them exactly who they'll be working with on our team. Again, you're not going to see on here hours or who's committed for what. It's just who they contact. In most cases. In all cases, the person that manages the engagement is the CFO, but sometimes we have engagements, like I said in that third slide or whatever, some engagements on our subscription are very limited, smally ones, so they don't have CFO involved, which is fine. So then it'd be the controller. But again, when you're building your team, you've got to have a really good controller, because a lot of folks are really great accountants and they're terrible project managers, right? So make sure, and it's expensive, to have a controller that has that capability. So charge for your work, make sure that your client gets who they're contacting, because nothing is more frustrating than clients are like, who am I supposed to talk to, right? So in all of after they sign our proposals, and we do have them do an ACH, we ACH out of their account. Sometimes people push back. Okay, I get it, but it is requested. And they send us their W-9, all that stuff. But anyway, so, and we need that in case we're doing payables for them. So anyway, back on the subject. So in all cases, the CEO of our firm, his phone number and email, Telegram, he doesn't have Telegram, but I do, so is all in there. And then we also indicate if something is really urgent, and I know nothing is like urgent in accounting unless the IRS really is banging on your door with handcuffs, but we tell them, call your CFO. And we do make it, again, inside of our niches only. We assign a CFO that is willing, I know this sounds awful, we do assign a CFO that's willing to literally take a call at any time. Because we have global clients, like I'm sure all you do too. And I know that sounds a pain in the butt, and you're like, oh, nobody ever does that, right? Yeah, at 4 o'clock this morning, I did get a call from one of my clients. So I really did. It's okay. I mean, I was like, oh, yes, hi, yes, no, it's fine, lovely, lovely, lovely. And it was actually not an emergency, but for them, it was an emergency. So I was like, I got to get this contract right now. I got to get this letter out. The engineer's going to go to somebody else. I'm like, I'll do the offer letter for you. So we do send this along with the signed proposal. And I think that goes a long way inside of your niche. Remember, if you're not charging, then do you really want to have the client being able to call you at any time? So this is another thing that we recommend. Then this is internal. We never send this, when I say checklist, we never send checklists to our clients, never. But this is for us, right? We want our team, again, remember that inside of our niche practices, our teams are very familiar with the industries in which they're working and what's normal in the industry, right? So we send out a compliance calendar almost first thing. And the reason we do that is because we want to understand if the client's missing any like tax filings or, did they forget the Delaware annual franchise tax? Did they not do their income tax? That's a classic. So these younger companies will come to us. I didn't have any activity in 2022, so I don't have to file a tax return. I'm like, when did you incorporate? Oh, yeah, that was in June of 2022. I'm like, you do realize the state of Delaware already told the IRS to expect a return. So we do the compliance calendar more for us so that we don't miss something, or that if there's a document we didn't ask for or we didn't get from the client, we know to ask for it, right? Like their sales tax exemption, whatever it is. And then we would actually, inside of our team, go ahead and go through all of this and make sure we have the information, the key documents. Those are the minimum documents that we require. There's obviously others. We'll want their cap table, all sorts of things. And then we want access to all the systems. So if they already have a GL, we want access to it. If they don't, we're going to set it up. Inside of our verticals, we have standard charts of accounts, not one for each vertical, but like 3 or 4 for each vertical, depending on the size and the nature of the client. And that also helps with our teams too, because then if you've got like a couple controllers working on 6 or 7 clients inside of your, let's say, ag tech or whatever vertical, they're all looking at the same chart of accounts. So 2,600 is going to be accounts payable or something, right? So no matter what, when you as the CFO or the practice manager or the team manager, you know what accounts you're going to be looking for. Like, this person always makes mistakes on this, so I'm going to be looking at that account number. That super helps, that unified chart of accounts inside of the vertical. And the verticals chart of accounts will be different. They're not the same across all of our verticals. Anyway, so we want access to their general ledger, or we're going to set it up. We're going to set up ExpensiFi. We're going to set up an AP platform. If we're not using ExpensiFi for vendor payments, then we'll set up an AP platform. Again, if they have inventory, we'll set up an inventory that we've pre-vetted for that inside of that vertical. Make sure we got bank, credit card access, Stripe, Gateway, whatever other things that we need. This checklist becomes a permanent record for the inside of our Citrix share file for the client, so that anyone in our firm that needs to go and see this, and it's usually the tax team at the end of the year, they know that we've gone through this checklist, we have a tax package prepared, and monthly closes for as many months as we've had the client. Is this helpful? Okay. Perfect. Okay, so the tools are available. I'm just gonna, how are we on time? You've got 10 minutes. Whew, okay, because I wanted to leave some time for questions. Okay. All right. Now, from a strategic standpoint, and I'm looping all the way back to the first slide when I asked you, even if you're not considering right now going into verticalizing your firms or focusing on certain niches, this information is still important. So the strategic aspect of capturing information is critically important for the decisions you'll make about your firm going forward, whether to niche or not, whether to break out the teams that that'll be working on different clients. So what we try to do is we make sure that when we're talking with clients, right, we do capture the accounting team, not the sales team during the sales process, but the accounting team is capturing as much data as possible from calls with their clients. So what we ask, again, remember these are inside of verticals, so the team is very familiar with some standard practices or some standard cadences, right? So they'll have a weekly call with the client, right, to go over questions they might have on, I saw this expense, it seemed to be too high. Can you give me, I see this large expense. Is it maybe for a contract that extends over several months, or is it a one-time, right? I mean, that's really important for accuracy as well, but it helps us understand a lot more about the client. So we'll have these weekly calls. We capture those calls, the data from those calls, in a log, so that we can go back during what the next bullet point says. We do a 10-day review, but that's just to make sure we got access to stuff for the most part. We're not doing a huge review on cost or anything like that. It's mostly, do I have all the accesses so I can actually execute to a first close? Anyway, so we do a 10-day, but the key is to your point, Jane, the 90-day and the 6-month and annual client review to make sure there's no scope creep and to make sure the client understands the value we're providing, that we're giving to them, every single month. It's a lot easier when you're doing these reviews. When it comes to the annual review, because we almost always raise prices at the annual review, almost always. So, but when it comes to that, the client has seen, these regular, first the weekly contacts, right? They've also seen reviews like you said, oh my gosh, we have this big project, so we ran over one time, right? We can write a new SOW, or we can agree to bill you hourly for that, right? Or it's a project flat rate if you want to do that. It makes it a lot easier when you're negotiating the price increases in the following year, because obviously, hopefully the business is scaled, right? So it's pretty obvious your business grew, and I don't mean transactionally grew. That's another thing. It's not like, well, now we're reconciling 500 transactions. That's not the focus. The focus is the expanse, with an A, of the business, right? They may be, when you first took them on, they're pre-revenue. Now, at the end of the year, they're doing some POCs. Maybe they're unpaid POCs, but they're still POCs, so there's contract review going in now, right? There's contract structure that you'll be looking at and advising them on. Hey, ask for your money in advance. You're a SaaS platform, we get it, but ask for quarterly in advance or annual in advance, depending on how large the cost is. So they're going to see that value. The other thing that we do consider inside the niches, and it depends on the last bullet item, let me just characterize this. It very much depends on how successful your niche is, right? So for example, we found that maybe one of our, I'm not going to say which one it is, but one of our niches did not have as much inflow of customers as some of the others did. We're like, well, what can we do to change that, right? So after the first year, we do give customer loyalty bonuses inside that one vertical. And the other thing you can do too, if the client is a long-term client of yours, you do want to reward them, right, for staying with you. I mean, retention is super important because churn hurts, right? It hurts because you've got teams sitting on the bench. It hurts because you got to go out and get, you have to beat the heck out of your salespeople, right, Pete, to make sure that they can bring in additional clients. So churn hurts. And so retention is really important. So sometimes it is important to just say, hey, thank you for being my client. You never complained about a bill. You paid the SOW. During the due diligence, we had to bill you, ad hoc kind of. And so, we're going to give you a 10%, thank you loyalty bonus or whatever it is on your first invoice. Or in that one vertical that didn't perform as we thought, and it was not the salesperson's fault. Seriously, it wasn't. It was just a marketing. It was an economic conditions, let's say that, impact. In that particular vertical, we were giving the clients a discount if they would give us referrals that resulted in our being able to get an engagement. I know that sounds weird, but it does help a little bit. So these are just ideas for, remember, you're building and then you're scaling your niche, right? So you may run into these bumps where the niche didn't grow like you thought. I don't think that's going to be the case, but it could. These are ideas to help you get past that. Is this helpful? Okay. So how much time do we have for questions? Whoa, man. Okay. Are there any questions or anything that anyone wants to share about when you were looking at, potentially verticalizing or niching your practice? Please. We need to record you, so that's why.
Thank you. So actually, I want to ask you, you have a lot of product or services, right?
Yeah.
And then like your client scale. Say, for example, this year they only want the transactional level support. Next year they want more. And now even scale more, like they want technology. Say they want implementation of ExpensiCon, Bill.com. So it can be very, very like small pieces all add together. I see the need of having a project manager on the client, and how do you normally choose this project manager? Is your SMEs on the products or one of your CFO's service? Exactly. If you have a higher level staff, probably it's going to blow off for your budget a little bit, and they can get really busy, right? Because they will manage like 100 clients. So how do you find that project manager from your engagement team?
That's a really good question, because that's one of the hardest things to do in niche, when you're building and scaling your niche. That is the hardest thing. Again, we're all really, the folks that are on our teams, I'm sure, are eminently qualified, very intelligent folks. But being a consultative accountant or what, very, very different from being, a really great accountant. So that is one of our biggest pain points. And the person that manages, that is the project manager, is the highest level person on the account. So to your point, it would be, if there's a CFO on the engagement, it's the CFO. So that CFO has the responsibility. And that's usually okay, because all of us guys, folks, as CFOs, we know how to negotiate with clients and present data. We did the following. Your business grew 30% on revenue, but 30% on headcount. You're in a new, you actually went into a new market or a new region, or you introduced a new revenue line, or you're doing some additional R&D. So the CFO is pretty comfortable about saying, now we're going to have to move you to the next tier up on the subscription. So we have starter package, we have growth package, and then we have, what we call full coverage package, right? And that can include HR and payroll and stuff like that. So the CFO, the highest level person on the engagement, is the one that ends up being the project manager. It's usually a CFO, because we almost always staff with a CFO, unless the client really pushes back. And inside of our verticals, so to specifically answer your question, inside of each one of our verticals, there's what we call a lead CFO. That person, it's like a me or a you. We oversee the whole practice area. We have our own P&L. So we're actually, reporting every month how profitable each of our clients is and how we're doing and what the costs are allocated to us by the company. Are we covering them? So it's usually the lead CFO is always looking at all of what we call the anchor CFOs inside the practice, and they have a core of very specialized controllers that know that vertical. So CPG controllers, they have to know inventory, sales tax, right? We can't switch those controllers on to, well, we could usually, CPG can usually go to SaaS, but it doesn't work the ot's way, because the skill set's usually so different. So we have these core units, and they know, right, when things have scaled. I'm now looking at filing, sales tax in all states instead of just 6, whatever. So we do communicate that to the client. So at that 6-month and 12-month review, it's usually the CFO that is the project manager getting the client onboarded, making sure the onboarding is going well. We do have an onboarding team, so they help quite a bit. To do the system, we do have that separation, right?
Also, that's a technical skill.
There you go, and that is for every vertical. The onboarding team does every vertical, because it's what you said. It's mostly make sure you got access to the systems, or that they're set up and they're integrated with one another, and that's all they worry about. Just get the client up and through their first monthly close, and then from that point on, then it's really predominantly the CFO and the lead controller that manages that engagement. We don't have project managers. We do have a very good sales team. We have a terrific onboarding team, really good operating team that set up the systems and stuff for us. But what ends up happening, of course, you can't set up a system unless you also have a lot of knowledge about how that system's being used. So operations works quite closely with CFOs during that project.
Yeah, it's getting more and more challenging, I think.
Yes.
Especially with the technology, they have every year upgrades, they have new functions rolled out. And then the technical team knows that, but there's no communication with the CFO.
Exactly.
So,
no, that's exactly right. I mean, I admit it. You're exactly right. That's exactly what we find. There's no communication. And they'll say, oh, the system's up and running. And I'm like, no, it's not. The bank's not integrated. Oh, yeah, we did that yesterday night. Yeah. Well, okay, that's great, but when I looked, it wasn't there. So, so to your point, yeah, if you can separate out like the onboarding maybe, and have that be general across the whole firm, and you know, handle all niches, but for the actual operational, and even like you said, the operational system work, like what does the system really need to do? Well, I need to do project costing, right? If I'm in a construction company, I need project costing. So it's great that the operating team, our operating team set up the systems, but who's gonna, and they put our standard chart of accounts in there, but the classes might be different, right? Or whatever, or they're using, you know, they have several subsidiaries, right? So we've got to do consolidated reporting. That part of the, you know, the kind of the, you know, the intimate knowledge of the vertical, that's where the CFO or the controller, the dedicated controller, is actually the project manager, and pulling on those resources. But that's our biggest that is the biggest friction point right there. You identified it. Okay.
Okay, so here's the QR code. Tina, you'll be in the chat if anybody has any questions. Also, Tina is like one of the kindest, loveliest, friendliest people ever. So like track her down and have a chat because she is an expert. I obviously work in ExpensiCon and I'm not an accountant or a CFO, and I find this kind of so interesting. It was yeah, it was awesome. So give it up please for Tina.
Thank you all. Let's give it up for you guys. Thank you so much. I hope it was helpful. I really hope it was helpful.